Hello guys, welcome back to this YouTube channel. So it's Friday again and just wanted to do a quick review on the previous market. Let's do a review on the price action we had from Wednesday till Friday. I already talked about Monday and Tuesday on my last video. That was a trade recap video. So today I just want to do like a review of Wednesday, Thursday, Friday, and then maybe explain some of the trades I took within the week. So starting here on Wednesday, this is Friday, Thursday, Wednesday. So mm, so this London session Friday. So here on Wednesday morning. I'm not sure this Wednesday. This is Monday here. Yeah, this is Monday here, 8 August. This is Tuesday. Next Tuesday, and this is Wednesday here. Okay. Yes. So here is Wednesday, London session. So on Wednesday morning. So this is what I was looking at based on so Wednesday morning, we already had this breakout structure. This Wednesday morning London session. So I need to add this session so I would know the exact day I'm talking about. So, yeah. So Wednesday morning, we already had this. Sorry, we already had this breakout structure here. It's like a 15 minutes internal structure because we are kind of like working with this breakout structure here. So this is like 15 minutes high and this the 15 minutes low. So this is like our trading range on the 15 minutes bar. Then we had all this internal bullish market structure within this 15 minutes range. So we can maybe study the structure within the range and then see if we could get in on a buy. That's the sense we didn't get in on a buy here, we didn't get in here, we could maybe just study what's happening within the range as price is pushing up and see if we could get a possible buy entry to maybe take out this high or something like that. So on the 15-minute time frame, they had some bullish internal structure, which is one of the reasons why we took a trade here on Monday. So here over here on Wednesday, we already had this internal breakout structure here based on the internal bullish market structure we have. So we have this internal breakout structure here. So these are low and these are new range like that's which is within this whole 15 minutes range. So on Wednesday, so this was like the pullback and we had this demand range here. And within this huge demand range which we have here, we had like this refined demand range here. And just above this particular demand range, we had some kind of equal lows just above it. This is like a textbook setup. That's when you start applying liquidity concepts to your trading. You can say, okay, we have liquidity just above our area of interest. Then you can maybe look for some kind of buys whenever price gets down here. But because of the type of entry I use when taking a trade, I actually did not get a buy here. Like a I didn't get an entry within here when price came back to this particular zone. So I'll just go to the 1 minute so we could be able to review that particular area on the 1 minute and see maybe there was actually an entry or anything. So we had this here. Okay, yeah. So here I kind of like knew that price was price was most likely going to like come into the zone to take out this equal load and then maybe respect the zone. I don't know if it will respect it, but I tried to take a sell that's Wednesday morning, which I kind of lost. Like I took a loss here on Wednesday morning. So I just wanted to like take a quick sell from this zone. This I was using something I think the 3 minutes something because my entry wasn't exactly at this. So this was like my entry. I just wanted to like take a quick trade. Maybe if price respected this and then I'll have taken a trade. The price pushed up above the zone. I think it came into this maybe something higher than this, but it was a loss. So when price pushed down into this particular this particular demand zone issues here. So what I normally do is when price is within my zone, let me say I have something like this. Let me say this is like my demand zone, the 15-minute demand zone that I want to take a trade from. So when price pushes down, that's based on 1 minute structure. When price pushes down into my zone, what I normally look at is I'm looking for that last lower high. So the last lower high will be somewhere here. So I'm saying, okay, before I would take a trade based on the reaction I'm getting from this 15-minute demand, I need to see a break of this last lower high. And if I get the break above this high, then I want to see price pull back and respect this new range, which is like the new demand range. I want to see price pull back into the range, respect it, and make a new higher high. That's the only time I would take a trade is now when price pulls back into the zone, then I'll take the buy, knowing that price is more likely going to respect this range. So I'll take the buy somewhere here and then just put my stop loss in a safe place and then target that 15 minutes high or maybe a 15-minute supply that I think price might maybe pull back from. So that's how I go about my entries. So going over to the charts. So going over to the charts here. When I looked at this, I was looking at this high here as my last lower high because this was like this is the low is broke. So this is the low price broke, which is here. So and this is like my last lower high. So until price breaks this, that's the only time I would maybe look for a trade. So Price taps into the 15-minute zone, which is down here, pushes up, breaking this. So the next thing I will look for is I want to see price pull back to respect the new range. So price pulls back, respects the new range, and then we now push up again, making a new higher high. So what I normally do is if I have something like this, if I have this one, because then when I was looking at price, I was confused of okay, I didn't know if I should use this as my zone for an entry or I should use the one above like this particular one or I should use this one here. The only reason why I didn't want to use this as my buy area was because price is like reacting off of this particular engulfed candle here, and this engulfed candle didn't really do anything significant. Like in my opinion, price didn't really do anything. This particular supply, and I don't even think I should call this a supply zone, didn't really break anything. I didn't really have a break or structure. This is just like some kind of pullback without price breaking anything within here, and then price just like reacting off of it before breaking. So maybe you can say that this is like our last area of demand before the break construction. But I wasn't really confident taking a trade from it. Like I didn't feel very confident taking a trade from this particular zone. But the zone was actually respected. So I think it's maybe one of the things that I'll study next and maybe see how I could apply them in my trading. So this is like what I wanted price to come into if I would take a trade, but price didn't really get to this particular zone. So that was the reason why I didn't take any trade on Wednesday. This is the only trade I took on Wednesday, which was a loss. I did take another trade on Pound USD. think I took a trade on Pound USD, which was also a loss. Yeah, Wednesday I took a loss on Wednesday. So had like this huge and that's why it's important that it's important that when you are trading or maybe when you are in a winning trade, you don't actually have to close all your trades on maybe your take profit area. Let me say this high, like based on this buy we had here. You don't want to close all your positions on this particular zone because the thing is you won't really know how far the market could like push up in that particular direction. So for me, I think it's best you partial out most of your trades or maybe close like 80% or 90% of your position that's of the trades you open. Just close like 90% of them maybe on that particular take profit you set and then just set the take profits like just edit and like just edit the take profits and then leave it open and just let the trade run because we already know how far it will go and that particular maybe 10% or 0.5%, so that 10% or 5% that you left running, it could actually cover the next loss you'll be taking. Yeah, like this is actually very important you don't close all your winning trades. Like don't close them once. Maybe when price like expands more and then you can just maybe okay, say okay, I'm okay with this. And then use that particular bit of profit, like that small profit you made from holding on to that position to cover for the future loss you take because you shouldn't take a loss. So that's it for Wednesday. We had like this huge push up here and I didn't really get in any trade. So Thursday, Thursday, I took another loss on Thursday. So here on Thursday, we had price. Price was down here. So when I saw price break above this high, price broke this. And okay, initially this is like this was a 15 minutes, had a 15-minute break of structure here. I have seen break of structure here. That's from this range. So now price is in a push phase, and I just wanted to take that counter trend trade maybe to this particular supply zone, or maybe this extreme supply here. So when price broke this high here, let's make this one. So when we had a break of structure above here, based on this like a 15 minutes structure, but things a lot clearer on the 1 minute. So we had this break of structure here. Price pulled back and respected this newly formed range. So what I wanted to see was for price to break above this, go back or maybe into this zone or into the extreme zone, then I will take the trade. The price didn't really do that, just pushed up and it didn't really come back to any of these zones or maybe a zone that I had here. And that's the thing with this type of trade. That is with entries like this, it is most you will most likely not get into trade. Like most of the time you won't get into a trade, but that's actually part of it. You just have to like accept the fact that you won't be on every trade and then just trade that particular model. So I had this particular supply zone here. I actually wanted to take a sell here, but then I was also waiting for that confirmation. So when I saw price break above this, I saw price react to this particular zone, and we now had a break above the zone as price now broke the zone. So to me, this was like we had some kind of interaction, like we had an interaction between supply and demand. So here, when we broke above this high, price pulled back, respected the range, and then we broke above this high again. I didn't take the trade here. This was where I took the trade because I didn't just feel confident. Like I wasn't really feeling the price action here for me to even take a trade here, despite having all this bullish market structure here. Like it didn't really make much sense to me. So when we had this break below here, this looked like some kind of break of bearish market structure to me. So I wanted to see that confirmation. That's why I had like this line. I wanted to see that pull back lower high, and then I'll take the trade on the next pullback, maybe a sell. But then price didn't really do that. We like get some kind of reaction from these supply zones here. Price push down and then push up, breaking this structure here. So now I was like, okay, here we had bullish market structure all the way from down here. We had bullish market structure, and we had a break in that bullish market structure here, and price turned somehow bearish here, but it wasn't really confirmed bearish, and then we continued that bullish market structure. Now mind you that the only confirmed structure we had, that based on the 1 minute structure I was following, the only confirmed structure we had was actually bullish market structure. Yeah, we only had some kind of break here, but price didn't continue down. So we continued that bullish market structure. I was like, okay, since price has realigned, like since the confirmed structure is bullish and now price is bullish again, I can actually take a trade from maybe a demand zone here or here. So that was the reason why I took this particular trade. But the mistake I made was that I was actually looking for maybe a smaller stop loss because the target wasn't really much. I was actually trying to take out this side. Yeah, I was actually looking to see price come above this side, but that didn't really happen. So here I had this to be like my last area of supply, sorry, of demand. And since this particular zone, this is like our whole reaction zone, like this is the high, They are like this high reacting to this supply here, to this supply zone here. So this is like our demand range. So I didn't want to set an entry here, don't set an entry here, and then maybe put my stop loss down here because it's like the safest place I could put my stop loss, which is like 13 pips. Like it looks very big for me to do that, and I had this range already here. So I think this was a 3 minute zone, the particular area I used for my entry. Let me show it. It's not a 3 minute, then it's a 5 minute zone. Yeah, it's a 5 minute engulf candle. So I saw the engulf candle, I was like, okay, maybe I should just use the engulf candle as my entry, and then I tried to put my stop loss just below this particular low here. This candle pushed down, so just decided to put my stop loss just below it. But then price still did what it did here. And since I was actually waiting for a clear break of structure before moving my stop loss to break even, that was one of the reasons why I took a loss. Because price didn't really break and close above this high. I just kind of like with this. So I wanted to see a break and close above this high. Now move my stop loss to break even, but that entire price came down, tapped my SL and continued up. So that was another loss I took um, on Thursday, and just had to wait. I didn't actually trade again that Thursday. I was like, okay, wait, yeah, I did take another trade on gold New York session. Took another a sell on gold New York session, which I also lost. It was lost the trade, but here on Friday, let me go to the 15. So here on Friday, I was looking at this as I was saying, okay, since we have this break construction here, you could say that the 15 minutes is, let's say, bearish based on this break construction, but that bearish structure is not confirmed as of not now, but when price was somewhere here during London session, that bearish structure hasn't been really confirmed. So we were in that pullback phase, and then let me say when we have a breakout structure here, we have a breakout structure. We normally want to see price pull back before continuing that trade. So I was actually taking the continuation here. So on Friday, London session, I was looking at this as some kind of supply zone. This is like the extreme supply zone. So price taps into the extreme supply zone, we get some kind of change of character within here, and then this within this range you can see that we have like this minor, this internal break of market structure here, this particular one here. So I was looking at this and saying, okay, since we have a break of structure here, price has now pulled back into this particular range. We also have some kind of sweep of liquidity. Price has now pulled back into this range here. I feel as if I'm not really that detailed on this review. So we had like this new range here with this low. So this is like our new supply range. Price pulls back, respects that supply range, and we get another break construction here. So you could say that we are working within this range and this range. So that's what I was looking at during the London session. And again, I was also looking at this to be like a potential sell area for me. Like if price pushed up into this, I would have taken a sell. And I also had this particular zone here, this inside bar candle here. But then initially I didn't have this zone. I didn't have this zone. It was I think around 7 o'clock in the morning. Around 7 o'clock in the morning. I saw price reacting like I saw this huge candles form like we had this huge push down. I was thinking like what's price reacting to? And we had this let me delete this one since price didn't come to this one. So we had this high to be like some kind of let's say Asian high and this was like Asian low here. I was thinking why is price reacting to this? Why is price reacting to this? Let me delete all this. So, so understand. So so when I saw this reaction here, I saw this reaction like surprise. So this engulfed candle here, we had this huge engulfed candle here. So I was thinking, why is price reacting to this? So that was when I marked out this particular low here, and I said, okay, this could be since we had this push down here, since we had this push down here, and this one, this push up here actually broke above this high. This could be a valid demand zone, and this could be a reaction to this valid demand zone here. So this is like this engulfs candle, but price came into the extreme week. I was like, okay, if this particular zone is going to, that means price won't be coming above this Asian high here. And that was one reason why I had that particular why I had this zone here was because I was thinking price would come above the Asian range or maybe even to this particular zone which is above the Asian high. So I think it's important you study and understand the structure of the markets before applying any other concept like the liquidity concept, Asian range and stuff like that. You need to study and understand the structure of the market first. Understand how the supply and demand zones, how they are interacting with each other. For me, I think these are like the most important part, like they are like the most important aspects of trading, not in general, but based on my approach, they're actually very important to me. So market structure, supply and demand before any other thing. Market structure first before any other thing. So since I had this reaction, I said, okay, price might not be coming above this high. And if price is not going to come above this high, this low is definitely going to be taken out. And then if that is going to happen, if this low should go, price will most likely come for this particular low because this like previous days low, this Thursday's low. So price will mostly push through to take out this low. So I said okay. That was when I moved down to the 1 minute 1 minute time frame. So here on the 1 minute time frame. So here on the 1 minute time frame, the first how I first looked at structure was here. I was looking at this as that as price pushing into this extreme candle here, this engulfed candle here, which was that Asian high. This is the Asian high. So I was looking at this as that 15 minutes candle. And at first, I saw this as a reconstruction price pulling back into this structure. Price now we now had another break of structure, which is now price respecting this particular range. So I said, okay, I'll take this as my entry. I'll take this particular zone as my entry. This was the first entry I wanted to take. Take this particular zone as my entry. I didn't have this zone initially. I didn't have this marked up. So on That was a 5 minute zone, if I can remember. I think it was a 3 minute zone. Yeah. So in 3 minutes, I had this engulfed candle here. In 3 minutes, I had this engulfed candle here. So that was like my zone on the 3 minutes. But when I was watching price on the 1 minute, price didn't really come into that particular zone. And I saw price react to this. When I saw this rejection here, and then we had like this impulse move down, breaking this structure down here, breaking this structure down here. So that was when I thought maybe this could be that this is our range. That we had like something say this like our breakout structure, and we now have this. So this is not like a different way that I was looking at it. I had this to be our breakout structure, rise pulling back to respect this new range, that this low to this high, price pulling back to respect and then price pushing out, confirming that these are new lower high. So I was like, okay, if these are new lower high, that means if price is going to pull back, it will mostly respect this range and then continue down. So that's how I looked at it. And then this particular zone that I used for my entry, I think that was a 5 minutes zone because I didn't really get anything on the 3 minutes. And there were so many zones on the 1 minute, so I didn't really use any of them. So here on the 1 minute, I had this engulfed candle here, which is like my exact entry. But I just had to like put my stop loss in a safe place because I didn't want a situation where I will set my stop loss just above this particular zone, which price kind of like respected. Price like respected this embossed standard. I didn't just want to set my stop loss somewhere here and then have price just come above it on top my stop loss, whereas still respecting this whole zone here. Like I won't really feel good if that happens to me. So just had to put it in a safe place, which was somewhere around 3.5 pips. And um, so yeah, this engulfed candle that was the actual zone. So just used the 1 minute engulfed candle as my entry, but I still had to put my stop loss in a safe place. So that was how I took this particular trade. So at first I moved my stop loss to break even when I got this break structure here, like 1 minute break structure. 1 minute break structure here. That was when I moved my stop loss to break even. And then at 1:5, which was somewhere here, this particular trend line here, that was like 1:5. That was where I closed I think 20% or around 15% of my trade just to cover my initial risk because I normally risk around 0.5% of my account size. So I just had to like cover the initial risk I had on this trade here, just partial out little portion. And then when price pushed down here, because I wanted to see price come below this low, like price, like it just had to come here. Sometimes price will just maybe respect the supply zone, but I wasn't using this as my target because the structure is bearish and it also has liquidity. That's if you apply liquidity concept, it also had liquidity, some kind of sell side liquidity for us to target. So I was actually using this particular supply range here Mm, yes, that was my moment. So I was using this particular supply ratio as my this engulfs candle. That was what I was using as my take profit. So and that was where I actually set my TP, which was here. So when price was pushing down, when price was pushing down, still somewhere around here, not exactly at the take profit target, somewhere around just before this pullback. That was when I closed another 60% of the traders. Now I now have 80% of the trade closed. So I just like let the remaining 20% run, and we are currently somewhere here. So that was it for this week's price action on Euro USD. So maybe next week, not next week, tomorrow. Yeah, tomorrow maybe I'll do one for pound USD or gold, like any of them, probably tomorrow. So that's it, guys. And I really hope you enjoyed this particular video and you learned something from it. Mm, that's it for now, guys. Have a nice weekend. Bye.